If you are a trader who uses ICT concepts, but yet you keep finding yourself on the wrong side of the market, in particular when you're trading the ICT silver bullet model or the breaker model, here's a process that has helped me to find myself on the right side of the market majority of the time. I promise you, if you follow these instructions that I'm about to share with you, you'll be able to find much more success in your trading. So pay close attention. I'm calling this the Optimus process. It is based off of ICT's concepts, in particular the breaker model and the silver bullet. But if you've been finding yourself on the wrong side of the market and you find that whenever you enter, the breaker gets disrespected, hopefully this process will help you to put you on the right side of the market. So to begin, first you want to identify the high time frame trend. You notice here, these are the major highs and lows, the intermediate highs and lows in between. And you want to wait for price to enter into a higher time frame point of interest. That can either be a fair value gap, an order block, or a swing low or high. Now, once that occurs, you want to take note of ICT's kill zone. The Asia range, which ranges from 8 p.m. to 12 a.m., the London session, 2 a.m. to 5 a.m., and the New York kill zone, 7:30 a.m. to 11 a.m. Now, what you want to see is price dropping down into the higher time frame point of interest during one of these kill zones. In particular, the New York session, if you are a silver bullet trader. Now, once price drops into that higher time frame point of interest, you want to drop down into your intermediate term time frames. Now, this is important. The key to your success is waiting for these time frame alignments to align with one another. The daily with the 1 hour, the 4 hour to the 15 minute, and the 1 hour to the 5 minute. Let's take, for example, the New York's AM session, which ranges from 7:30 a.m. to 11 a.m. In particular, within these hours, you want to note price action that occurs between these time frames: 8:30 a.m. to 9:30 a.m., 9:30 a.m. to 10 a.m., and 10 a.m. to 11 a.m. Now, within these segments of time, you want to note and look for a closure and displacement above previous candle's high, like this one here. It's another one, closure above the previous candle's high and displacement. And here's another, closure above the previous candle's high and displacement. Now, once we get that closure above the previous candle's high and displacement, we're going to mark this as our key candle. And in the range of this key candle, in particular, from the closing price and anything below, is where we will be looking for an entry on the lower time frame. In this example, the next candle printed and the low stopped at this level here. So we'll be looking for an entry on a lower time frame within this range for the best and most high probable entries. And then we would target the closest high. Now, once we drop down to the lower time frame, that can be either a 5 minute, 1 minute, 15 second, even 5 seconds. If you're on side, you want to look for the same fractal, a bullish candle closing above the highs of the previous candle. And once that occurs, you want to look to enter in a fair value gap or an order block. Once we enter, we want to put our stop loss at the low or at the closest swing low or the most recent swing low. If we are able to take on the risk, we can even put our stop loss low at the intermediate terms key candle and target the high. Here's some back testing examples. Here you notice the 4 hour time frame, we hit a 4 hour point of interest or a fair value gap. On the 15 minute, we get a nice bullish candle and a closure above the highs of the previous candle, and then creates that range that we'll be looking for an entry on the lower time frame. And on the lower time frame, in this case, a 1 minute, it prints that key candle bullish candle closing above the highs of the previous candle. And in this case, we even get a nice sweep just before that, which makes it very high probability. And within that range, we're looking for an entry right here. Because we're on side, we can even drop down to a lower time frame. Notice here on the 15-second, we get a nice sweep and a bullish candle prints above the high of the previous candle, creating that range. And in this case, a small fair value gap. On the 5-second, same thing, a nice sweep, and prints a bullish candle above the highs of the previous candle. And you could enter in the same range, the fractal range of that bullish key candle. I hope what I just shared helps you with your trading. If anything that I've shared is unclear, or any of the terminologies or concepts are something you're unfamiliar with, please visit ICT's official channel to learn more about them. I hope to see you in the next video.